Hello everybody and welcome to Project Trade. This is the Technical Indicators show where we look a little bit deeper into all sorts of technical indicators. Barely beneath the surface really, but still these videos designed to give a solid overview on the generic interpretations of how the indicators are intended to be used, regardless of whether that is good or bad in the modern world of trading. And in this video we're talking about a much known technical indicator called the Chaikin Oscillator, the CHO, or sometimes known as the CHO. As the name suggests, it was created by Mark Chaikin and it was made back in the 1980s, so pushing on to being considered rather old now, but still available on many a trading platform. The indicator is typically considered a momentum indicator, looking at not just the change in price of an asset, but the rate of change in price. This helps identify trends and the strength of the trend, but it can also be pushed to use for reversals in overbought or oversold conditions. If you're already familiar with the MACD and accumulation distribution indicators, then in terms of substance and style, you could consider the Chaikin Oscillator to be the MACD of accumulation distribution. If you're unfamiliar with those indicators, then that won't make any sense, but that's okay. The video isn't over here just yet. A key element of the indicator is that it incorporates volume into its formula. That helps ascertain whether a move in price is backed up by many traders or whether it's a flash in the pan without any true force behind it. For us on our platform, that volume reading will be based on the tick volume, but maybe you'll have access to real volume data to refine the accuracy of the indicator's purpose even more. It's open for you. We're stuck with the tick. Let's bring it over to the formula, and fair warning that there are going to be a lot of terms explained fairly quickly. So the default formula for the Chaikin Oscillator is to take a 3-period exponential moving average of the accumulation distribution line and subtract from it a 10-period exponential moving average of the accumulation distribution line. So we have individual videos already delving into the EMA and accumulation distribution if you want them in more depth. For here though, we know that the EMA is a fast responding moving average, but let's take a bit more of a look at the accumulation distribution formula just so we know what our Chaikin Oscillator is incorporating. First off, here's what the AD indicator looks like on the charts. It's that oscillator beneath the price charts with the blue line moving roughly thereabouts up and down with the price, although it's certainly no perfect match to it. And here comes more of that terminology. The accumulation distribution value is the previous accumulation distribution value plus the current money flow volume. The current money flow volume is the money flow multiplier multiplied by the current volume. Here's the money flow multiplier formula, which is comparing the highs and lows of price with the closing price. Alright, so now we can work forwards again, take our money flow multiplier and plug it into the current money flow volume, plug that into our accumulation distribution value, and one final plug of the accumulation distribution value into our Chaikin Oscillator formula, thus completing the methodology. Hopefully all that makes perfect sense. I'm sure it does. Yeah, the exact formula, it's not necessarily important, not so much as understanding the actual visual that the formula creates on the charts. So with that in mind, let's bring it back to what our indicator looks like here, the oscillator beneath the charts. First note the silver line running across the center of the oscillator. That is our very crucial zero line, and it's crucial because the main focus of the indicator is that when its value is above zero, that indicates that accumulating has been happening, that is a buyer's environment, or if the value is beneath zero, then distribution is being signaled. The indicator believes that sellers have the edge in the market. That's a lagging indicator, of course. All of the action that it's studying has already happened, but now we can translate all of that through to the actual factual entry signals for the indicator. Firstly, that zero line crossover couldn't be simpler. When the value of the oscillator crosses above zero, you enter a buy trade, and when it crosses beneath the zero line, you'd be looking to enter a sell trade. Just remember to wait for the end of the period so you get a closing value confirming the crossover. Don't want to jump the gun. Here's how a buy trade example looks for that. We've got a couple signals here. There's the first crossover on the indicator going above zero, but the entry price at the top of that candle there, that one doesn't look so good. Not a trade we'd want to be in, so we avoid that one somehow. Over here though, we get a second cross above the zero line. Let's see where that gets us in. Ah yes, very good. That's a bit more of our speed. That's the trade for us. So we get into that one and it's money profits on the Chaikin zero line crossover, all for us. Similarly, for a couple sell trade examples, this crossover beneath the zero line here starts us off, maybe not yielding the best results, could make some more money there, depends on the remainder of your strategy for sure, but doesn't look great. Not compared compared to this crossover beneath the zero line here, which we most definitely get into right at that spot there on the price chart. And off we go, locking in our profits once again. Feels good for us. That's the zero line crossover. It's the main trend finding momentum checking signal coming out of the indicator. But if you want to hunch towards reversal signals, the Chaikin Oscillator does carry divergence with it. Divergence, for those unfamiliar, is when price pushes further in one direction, but the indicator pushes in the opposite direction. The indicator values and the price are divergent to one another. Bullish divergence signals a buy trade and bearish divergence signals a sell trade. Could best be explained through examples, so here is a bullish divergence buy trade example first. We can see where those yellow lines are running near parallel to one another, that price has dropped between the two ends of the lines, and so too has the indicator value. Price and the Chaikin Oscillator are in agreement with one another that there is a downward trend going on. However, when we add these aqua, teal, cyan, blue lines in, we can see that whilst price drops further between the 2 points, the indicator reading actually makes a higher low than in the previous trough. Price has gone down, but the indicator has gone up. Divergence. So we enter into our trade around here in the yellow ring, and we are making money once more. How fortunate for us. Looking good there, divergence. Onto a sell trade example we go. Bearish divergence is what we want on this one. If we look at this peak on the indicator and we compare it to where the price was at the closing of that indicator value, then we put two yellow lines down comparing the movements of price and the indicator value following that peak, we see that whilst price continues to find new highs, the Chaikin Oscillator is divergent because at the same time its value has fallen repeatedly. This kind of chart does give you plenty of opportunities for divergence, which should yield some healthy profits if you get in right at the very peak, the tippy top of price, which is of course what we managed to do perfectly, and no surprise there. Divergence coming in clutch for us again. Finally, you can use the indicator as a general signal towards overbought or oversold conditions in the market. That is using relative levels and determining that if the indicator pushes past those levels, there's an increased likelihood of a reversal because the indicator has gone too far in one direction. Gotta be a retracement coming at least. So if the indicator kept pushing up and up and up, then eventually you say it's overbought, so you take a sell signal or two. Then opposite versa, if the indicator is dropping and dropping in value, maybe you think it's time for a buy trade because surely the move must end sooner or later, surely. It is potentially less definitive and more subjective as an entry signal compared to the zero line crossover or the divergence, which have clear definitions over when they've occurred. Overbought and oversold signals can take experience of using the indicator whilst incorporating general price action to visually see if the sharp movement of the indicator matches up in price. Can be tricky stuff, but if you know what you're doing, as always, there's going to be money to be made. Either way, those are some typical ways of using the indicator for getting into trades. Next up, we can use the indicator on defense, not just the offense. That means there's money management options for us using it as an exit indicator or for profit taking, but I will say the methods are not particularly inventive. Yep, just reverse those entry signals we talked about into exit signals. So good. We allude to this in plenty of our indicator videos, but if you think an indicator is good enough for getting you in, then it could be good enough for getting you out as well. So that zero line crossover can work in just the opposite fashion to the standard entry. The Chaikin value moves above zero, close down your sell trade, or if it goes below zero, shut off your buy trade. Obviously, it goes with saying that it's not going to be the case that you can use only the Chaikin Oscillator as your entry indicator and exit indicator. Gotta be real, it is not going to work out at all, just happily entering and exiting with the value dipping over and under the zero line. If it did work, then common sense would tell you we'd all just do that all the time. Banks and hedge funds, they would just run that basic algorithm all day long, the Chaikin zero line crossover in and out, until eventually they bankrupted the world. Still there as a signal for you though. Also, if you want to take some profits off your winning trades, you can use overbought or oversold levels to help you get out of the move. For example, if you're in a buy trade and the Chaikin gets to a very high relative value in a short space of time, you may want to hop off the trade lest it all come crashing down on you. Your sell trade moves down too far, too fast, take half the trade out of the game, lock something in for yourself. When it comes to successful trading, it's pretty much all about some consistent money management. Play it safe, all that. In the markets, although the indicator was designed for stocks, there's no reason why it can't be used on any type of asset, be it forex, currency, currencies, commodities, or regular old miscellaneous. Give it a whirl. Similarly for time frame, it's all about you, whether you're a swing trader, a day trader, a seconds trader. This will most affect whether you're wanting a daily time frame or 1 minute time frame. Either way, Chaikin will give you a signal. It isn't hard specialized for any given time frame. It's certainly not going to be infallible on one chart and way out of step on another. It exists in all time forms. You just got to find your edge. Look out for price chart patterns too. Those can be handy in the markets for helping you form a full idea of whether to trade or not to trade. It might be something as simple as support and resistance levels or head and shoulders helping you out. Maybe it's an 80-year-old Elliott wave pattern that's just about to pop off. Your parents waited for it, so did their parents before them and their parents before them. Now that final fifth wave is starting to form on the monthly time frame and you just know that everything is going to work out all right. Or maybe it's all much ado about nothing and 4 generations of your family simply wasted their time setting all this up. Still worth keeping an eye on though. For similar indicators, if you're after a zero line crossover on a momentum indicator, then look no further than the MACD, the moving average convergence divergence indicator. We did mention it at the start of the video and now it comes up again. Same as the Chaikin, its main signal is a simple zero line crossover, which can be surprisingly effective as long as you get out of your trades at a semi-decent point. We have done a basic MACD zero line crossover strategy here, which did turn pretty profitable for us. Maybe the Chaikin and the MACD crossover on the same candle at the same point of time, and that cements in your trade. What a winner. Gotta be good. There's also the accumulation distribution indicator itself, as we showed earlier, a nice single line oscillator. Or if you wanted to switch out the accumulation distribution indicator, you could try the on balance volume indicator instead. Although if you wanted to incorporate the OBV formula into the Chaikin oscillator formula, you will need a custom indicator for that, or you'll be doing it the old school by hand way, the brain and hand in tandem with paper. Though honestly, trying to do those calculations when you're trading on the 1 minute time frame, believe me, not ideal at all. There's also another indicator from the man himself. The Chaikin money flow is a very similar indicator to the Chaikin oscillator. It's also using a single line oscillator with a zero line crossover. Its formula begins with the money flow multiplier that we discussed earlier as part of the accumulation distribution and therefore Chaikin oscillator formula. It's looking at the highs, the lows and the closes of price and then multiplying that money flow multiplier by the volume and calculating an average value over the last 21 periods. It's a useful indicator, but the Chaikin oscillator is a bit more of an advanced version of it, so my preference does lie with the Chaikin oscillator. Plenty of indicators to play around with though if the CHO doesn't sit quite right for you. In conclusion, not a bad effort from the Chaikin oscillator. It's got some simple uses with the zero line crossover being involved, so it shouldn't take too long to get the hang of, but most importantly it takes numerous components into account for its formula. There's momentum indication backed up with analysis of volume all through the accumulation distribution indicator, and of course a trustworthy moving average value. All of this leads to a diverse set of signals that can be utilized in a variety of ways. You've got your trend signals, your reversal signals, either from the overbought oversold momentum or from the divergence. Lots of good entry signals, and those entry signals getting you in can also get you out. Exit signals in there as well. It sure is one of the many indicators out there, and there's plenty more research to be done on the Chaikin oscillator's trading style and performance, so come and join the club, get trading on it. Is it likely that you could become a trillionaire by using only the Chaikin oscillator? Most obviously not. It is a single line lagging indicator. That would be crazy, and everyone would just do that all the time and there'd be no more poverty, unless financial institutions bankrupted the whole world first. It's possible. That's all from us on the Chaikin oscillator. If you do want more information on the indicator, you'll be able to find some of that no problem. Just take a look in the video description. And as always, every single price chart we show you has been completely 100% pre-selected. They are not just arbitrary price charts where examples are plentiful for profits. We search deep into those charts to find the moves that show us clearly making maximum profits, as though the indicator was some sort of a winning lottery ticket. Not ever really the case once you get out onto those charts though. Thank you for watching. This is Project Trade. I am the Detective's Magnifying Glass, and there will be more.